Good day, traders. I was looking at Euro USD, so I see some trades coming. Maybe for now. Sorry, now it's already November, end of November, towards the end of November, so it might come. The home runs might be for next year, but let's check what I was seeing. So for this is 12 months, remember. Okay, let's go 8 for 12 months. Okay, let's go down. So now we are here. Right. Okay, 6 months. So we have a bounce here. Some might call it a retest. Let's go green because it's a 6 months. So let's use the dotted lines just to show that it's been used. And yeah, we started here, so it went up and closed before it touched the resistance. Yeah, I'll call it the resistance. So it opened and then went up, touched the resistance, and then came down. Now it's trying to bounce on this support. So as you can see up there, they are relatively equal highs. So let's go down 3 months. Right, it bounced here on this resistance with this bearish candle. Another one opened after this one as well. So this double top is still standing. Yeah, it took out we're on 3 months, so we are going with yellow. It took out the liquidity here. So liquidity that was resting here, it was taken out, and liquidity that was resting here, it was taken out. So let's check with we'll put this one on yellow, signifies it's a 3 months. Okay, let's go down. Month. Month. Seeing here a what do you call an OB right here? Okay, Okay, this one is gonna be solid because it's still the solid line. Okay, another thing we can do, because it seems like it's still going up, just make it big so we can get the 50% of the whole thing. So 50% is here. It's 17124. 17124. Okay, let's remove. Let's remove. Now we know. Okay. Put the 50%. We use the dots because put the it's a 50%. Let's use the dots. Alright. So as you know, price can play between the two, between the 50% and the start of the OP, which was yeah. So let's check. So this one. So solid because it hasn't, so that's a bullish OP. That's a bullish OP. So we get a 50%. So the only thing we increase is why we increase is so that we can get a 50%. We just need 50%. 600. Remove that, remove that, put the 50%, use the dots, right. So this is the monthly. Let's go down. So according to the monthly, we need to bounce over from in the middle here and then go down towards the 75%. Remember, underneath the 75, it's what it's called the discount. So in order for us, remember on the 12 months, just keep in mind on the 12 months, the euro is bullish because it needs to go over, close this fair value gap over here. It's bullish. But since it's bullish, just keep that in mind. It's bullish. Then we go down to our where we're in the monthly. You cannot buy while it's on. Remember, on top of 0.5, on top of our 50%, this part, this should I put the, let me use a greenish color. Okay, it's not too greenish. Right, yeah. And then let's use the red for here, but I'll remove them. It's just for now, just for clarification. Yeah, so remember, the top part, which is green, is the premium. The bottom part, which is red, is the discount. So in order, if price is going up, it's bullish at the moment. Price is bullish, but if price is going bullish, to fill that gap, of which that can take the whole year, the whole of next year, even maybe till the other following February. But anyway, in order for price to get up to this, fill this gap or this resistance, to get to that resistance, price has to go up. In order for price to go up, it needs to take the, sorry, my thing had paused there. The liquidity that's resting. So as it took the liquidity here, so now price went up, and then took the liquidity that people they were selling because they were seeing this as a resistance or something that they sold, and then they put the stop loss. Price came down, took this liquidity, and then went up, took this liquidity again. Now what it needs, because now this was parabolic, there was a parabolic move. It needs to relax, come down a bit, and then go up again. So us as traders, we cannot buy the pair when it's on the premium. That's just a disaster ready to happen. We need to have a discount where the price is discounted. Then we know that it will, then we can buy and then sell at when it gets high. And now price has already had the change of structure here, or change, what do they say, change of structure? I think, just that I know it by mind, but I don't know the terms. The terms get lost somewhere. But yeah, that's what we need. We need to, price needs to come down to discount before then we can buy, then it takes us up. So let's remove these blocks. Okay, and then let's go down to weekly. Let's see. Okay, let's remove this as well. take it close and view it close. Closer. Closer. Alright, let's see. Okay, it doesn't give us a clear direction where it's gonna bounce at on the weekly. So let's look at what's there is here. These are blue. Remember this right in here between this where the start of the OP and the 50% of the monthly OP. This monthly OP. Okay, I'll fix the lines. No. This one is rested inside that monthly OPs. Remember, it is allowed. Price can come down here because it's still within the OP. So we'll just have to wait for a bounce. Let's see if maybe a daily will give us something more. Okay, via a daily, we don't have anything that we can say up above because this OP was taken by this candle here, and this OP was taken by this candle here. This OP, it should be taken by, it was maybe taken by this candle here, then went down, and I think this candle, a daily candle, will maybe reach. Let's put it here. Here this. So if it does get, it's still within the 50% of the monthly OP, and the start of the OP, it's still within. So if it comes here, or if it comes here, or if it turns here, it can even retest the 50% and then it falls. So when it falls, we've got a long way down. So that can take the whole, it can be a home run. So yeah, on daily we can see that it's this OP was taken by this candle, and then it went up. They'll call it a proportion candle. But as you can see, these ones has left a fair value gap right there. Price left a fair value gap right there. Okay, it's a daily. What is that? Is that? So price has left a fair value gap right here. And if you can see that fair value gap, it lies within the monthly OP, bullish OPs, and underneath the 75% off right there of the discount. So it lies in the discounted area. So there are we have three confluences: fair value gap, within the monthly OP, and under the 75. So price should bounce and come straight down. Well, it won't come straight down. It will do the step down, step down, step down, but it will come right there. And then let's say maybe we can put our take profit here, just so that we know that we will before price comes here, at least our take profit will be hit, because price might not come straight down, it might turn somewhere, so we don't want to be it turns before our TP. So remember, this white line is the resistance, the 12 months resistance. So what do we need? So this is the resistance, right? The 12 months. So it went up, came back, hit it once, hit it twice, hit it 3, 4, 5 times. But anyway, all you want, if we can hold for that long, that is, you don't want stress in trading. After it hits the TP down there, and then we look for a confluence to go up, and then you'll hold for the whole year till it gets here. The whole year. But anyway, yeah. Now what we need is a confluence that this is going down. We know that it's within the monthly bearish OP. We know that right now it has already entered that area. It has already entered. So for the resistance, this resistance is go down to H4. You'll see it's the resistance there. As you can see, if we put our, let's just put our thing, let me show you this. Okay, go away. So this is on it, hit, came back, hit, came back, hit, 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 hit. So yeah, that's the resistance. So this is where we should be anticipating that price will go down. So what I do, well, it's not like a sure thing that will happen. What I do is I keep marking as price goes up. I keep marking the low of that candle, that daily candle. That's how I end the low of that daily candle. Let's use purple just for so you can see what I'm dot use dotted ones. As price keeps going up, because now I have a clue, or should I say an idea, that price will touch and then go down. So I mark the low of that current daily candle as it goes up. If price closes without hitting, maybe let's say it closes somewhere around here, I'll move and then opens another daily candle, then goes up. I'll move that uh, line of mine towards the bottom of that daily candle, below of that daily candle. If let's say on Monday, let's say by tomorrow, because Friday tomorrow, the bullish candle hits there and then it closes without being red, while it's still bullish, it closes. I'll keep my line on that low of that bullish candle and then wait for Monday. Then Monday, the candle should go and pass, then break my low, my my line that I've put there underneath the bullish candle. It should break that low. Let's say let's put it here. Let's say it's this one. It should break this low and then close underneath this low. Then now I know that there's, if you go down in maybe let's say H4, because as you can see it's a swing here on H4. If it comes down, breaks this low, then I know there's a change of structure. Then I'll wait for it. Maybe it will retrace a bit and then come when it comes back down, then I enter. That's when I enter my sale. And then I'll hold for a long time, a very long time. That's when I'm not sure if we still call ourselves swing traders when you can hold for this long. But yeah, that's where I hold. So yeah, let's see if I can still measure. Let's say it comes from here till here. I don't know if that's so. Let's say from here, cause don't catch unless you go down with your time frames. But for me, I use daily H4 and dailies to end, as I've showed you before. I've showed you now. So if you get it from here till here, then you're looking at about 800 and let's say 899 pips. I will say just 800 pips. We have like 800 pips. So yeah, that's the sale I was looking at EU. That's this sale is there's a sale coming from EU. If let's say you get it from here, take it up. Yes, as you're looking at about 1,485 pips. That's why I'm saying it might be the whole year. might be a whole 12 months of holding. So yeah, hopefully that's not bad, but you can still have not have, maybe if you don't want to hold to this, you can still have like your other from here to here. That's another, they call them supports. You can still have your support here. Maybe put your, there's another support here where the body of the candle starts. That's a support. There's another support here. Here's another one there. And then yeah, I'll see those four. 1, 2, 3 is another one. If you are going down, if price is going down, going bearish, you're looking for bullish. You're looking for bullish candles. When price is going down, and on the left hand side, you're looking at bullish candles. That's where your supports are. But when price is going up, looking left, you're looking at bearish candles. As you can see, this one bounced support. Yeah, well, this one it nearly bounced, but it bounced here on the OP. As you can see, it went up to maybe the 50% of both of those two. And then yeah, this is what I was talking about. This is a perfect example of what I was talking about. You see here, price is going down. You're looking at this bullish side. So let's go to this side. This is a great example on the hand side. So as price was going up, price now is going down, right? This candle, you're looking at this candle is going down, then it starts to, and you'll be wondering why it's going down. Maybe it hits it hit a resistance somewhere along the side, maybe on the higher time frame. It's bouncing off from the higher time frame, then it goes down. Then right as price is going down, you're looking at the bullish candles low body. Then price will come there, hit that resistance, break that resistance, and then it goes up again. Then there's another support, say support here, resistance up. Then it comes down. When it comes down, it breaks that support. It becomes a change of structure. As you can see, change the structure. Then that's where I place my sell. Sell. That's where it goes down. Like, as you can see, it just went straight down. So yeah, that's how I do it. If you go down to a lower time frame, you'll find that this is oh, the many candles bouncing up and down there. Just now. Oh, there we go. There we go. So this is the support. So it came down, broke that support, and then closed underneath. Now what I'm waiting for is here. I'll maybe put my alert here. Then price will go up. Then when it comes down, I'm waiting for it. My alert goes off. Then I put my sell. Then price goes down. So that's how I do it. That's how I end. I wait. I put my line underneath the candle, that's the bullish candle. Wait for price to come back. Now I'm anticipating a lower prices. So I'll put my bullish line underneath the bullish candle. Wait for price to come back. Break that line. Close underneath. Wait for price to go up. Then when it comes back, I put my sell. So yeah, that's how I do it. I use dailies. I know it can take a month or so just to wait for it to come back, break, go up, come back, and then put a sell. Yeah, it can take about 2 to 3 months just for waiting. But hey, as you know, trading is all about waiting. So yeah, this is what I was seeing on the euro. So I hope you find this helpful and good luck in trading. Later. Bye.